Welcome to TradeTheMBI.com. This is John. This report is for the 10th. As we get further and further up the scale here on the shakeout, we can see that not only are we in what we would consider a warning line, very close to what the 25 level would be, which would be extremely overbought. We've already had orange move up into the short category. We've also had the short-term buyers drop off, though they are completely resetting at this particular point, and pretty decent drop-off of mid-term buyers while we're still holding up in price. And so just like we talked about over here when everything was getting a little overdone and we were refloating, we reset completely and then created the next run, and we're in the process of working through that overbought now. And this is what throws people off, because there are oscillators and everything. We're still going to keep reading that we're extreme, blah, 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 blah. And that's fine. Cyan, well underneath the red. You do have to watch for, though, when you do get cyan under red and you have these steel cross below the cyan. If it had stayed above the plus 13.5, then you would have been, well, the minus 13.5 in this case. If it had stayed above there, then you probably would have seen a bit more dip going through, but the fact that it crossed over below the minus 13.5 is the equivalent of it being from the top side up. So are we going to see some softness within this? Well, we saw it the other day. I think you're probably going to get more sideways consolidation. The NQ, NASDAQ, still working its way up, and like I said before, if the NQ starts to outperform, because it's been lagging the ES or the S&P, then what you're going to get will be a significant push higher, because it has quite a bit of ways to go to catch up from an equilibrium standpoint, at least parity. The fact that the euro still staying strong and holding above the range, I'll probably extend those out so that you'll be able to see this a little clearer, because I'll be keeping it out of the way. I'll just take the number off it, but somewhere around that 15.5 range is what we've been looking at as a normalized position. The fact that we've been holding outside that, both sort of a dollar dis, which is kind of interesting, because at the end of the day, the U.S. economy is still outperforming Europe dramatically, and really the euro should be lower, but central banks like to get involved in those kind of situations. TLT, a little bit of a bounce back. This isn't going to hold, because you can see that it's still dip below the red line, falling shakeout, so momentary reprieve. And oil, it's reset with the oversold, but not showing a new buy at this particular point. I think it's easy to see that the return above the EM green in this particular case would get you back up in a position, but you really need to see that orange drop back down below. You're kind of stuck in that no man's off of the short that we get way back over here, and it certainly has proceeded quite nicely. And gold making its resurgence. We finally saw it get a bit oversold. And actually, the orange at minus 18.45 is right at the same as the red line, and also below the green right at this particular point. So, strong move there. That would be a new buy if it finalizes itself a little bit further. Here was the intraday action. I posted this chart right back here showing where I thought that we were about to start to get a retrace, and obviously looking at your positive extremes, we could see that, well, we've got stuff going back from a couple of days. But we ended up with a strong cross of steel below cyan. Even though the cyan was below red, it was coming to that crystallization point, and also then you ended up with short-term buyers breaking, mid-term buyers in the green breaking below it as well. And that was the cue right there. 2 more bars before on the 5K it dipped. Now, didn't get the reset below for a buy signal down over here, and as soon as you broke back below the 50%, it was a nice follow through all the way down to where you then actually got the orange below red and triggered the buy, flattened out for a couple of bars more, and then took right back off up to the 50% line. And that's where we're currently at this particular point. Ended up with some softness right here. But I don't think that's going to produce anything yet. We may see it more when this shakeout dips below the yellow line right there. And that might actually trigger us coming back for 50% of this move. So it's still a little bit of softness, but you can see similar resistance point right there. Couldn't get past it, and we're actually dipping a little bit lower there. So that is the current strength and or weakness. I really don't think that you can call it too dramatic weakness yet. I think that's going to start to grow as it becomes clear that tax reform is probably not going to move forward, and that's going to create some headwinds. I mean, you've got some positive things that can be done with just the government not being involved in heavy regulation and that, but people would like to see that advanced growth because you really want to see a strong, vibrant push in economic growth, and you're still at an area where things could tilt the other way. So we just have to keep vigilant. We'll follow the indicators, and as always, though, trade well, and we'll talk again on Skype chat.